ethos.com/term. That's ethos.com/term.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Owning Real Estate in Retirement. Mike, when we talk about someone who might be considering a move from where they've lived pre-retirement to a new location, what are some of the main things they need to consider?
Yeah, I think that they need to focus on the costs first and foremost. I know a lot more goes into a decision like this than the costs alone, but what I find consistently is that folks in retirement overestimate how much they can save by moving and underestimate how much they're going to spend as they age to stay in their home. And so both of those factors are important when considering this big decision of, hey, do I consider downsizing or moving to another area?
One of the other things that we've seen over the past few years is that some of those estimates of costs can change quickly as well. I think about insurance in Florida as an example, property taxes in parts of the country. These are things that you need to account for, and that those costs might change as you go through retirement.
Yeah, I mean, some of them are easy to identify. Like, yeah, insurance costs have sure gone up a lot, and maybe they'll continue to do so. Electricity costs are another one. The others, though, are much more difficult to quantify. Like, I currently snow blow my driveway. How much longer will I be able to do that? How much longer will I be able to climb up the ladder and clean the gutters? Like, these are really complex questions that you need to very much think through as you age in your home.
Our guide is titled Owning Real Estate in Retirement, and there are 2 ways to request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. Again, the guide is titled Owning Real Estate in Retirement, and you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Marc Varner is the CEO of Veterans Development Corporation. Marc faithfully served his country from 1981 to 1984, and we're thrilled to have him as a partner and presenting sponsor of the DAV 5K Boston. Marc comes from a proud military family that includes his father Victor and brother Timmy. Marc talks often about how serving his country was one of the greatest achievements of his life, and it's one of the main reasons he chooses to give back to this special community. Marc is honored to continue the legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Marc, and it's why he's taken the time to fully support the Disabled American Veterans Department of Massachusetts. You can join Marc and help our great American heroes today by making a donation to support the DAV Department of Massachusetts. Please visit dav5k.boston. That's dav5k.boston.
Estate planning doesn't have to be complicated. Cushing & Dolan's new guide, The Simplicity of Joint Revocable Trusts, shows couples how to stay in control, avoid probate, and help protect what they've built for their family. Call 866-848-5699 right now and ask for your free copy today. That's 866-848-5699. Or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. affiliated.
This is Michael Valila, adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Paul Lane and Marc Fandetti.
Welcome to this Tuesday edition of the Financial Exchange, and happy Veterans Day to all our listeners out there, and a big thank you to all of those who have served and protected our country. We have a busy day today on the Financial Exchange, a lot of stories to cover here. Certainly the one that we'll kick off the program with is the continued updates on where the U.S. federal government shutdown sits at the moment. We are about 40 plus days in. However, we did get news last night, and some of this was kind of teased out yesterday, that the Senate did in fact pass a measure to end the government shutdown through a 60-40 vote. It was approved to move along to the House of Representatives, where they will vote on it, I believe, as early as Wednesday at 4 o'clock, and it's very likely that the Republican-controlled House will move that on to the president's desk after, and we could be looking at the end of the government shutdown likely Thursday or Friday of this week. So certainly welcome news here, Marc, that this will likely be put to bed here over the course of the next couple of days. The agreement that is set in place will extend funding for the federal government until January 30th, and then myself and Marc and Chuck and Mike will be talking about this probably all over again in a couple months from now, where we can look forward to using some of our old material on potential looming government shutdown. But hopefully this buys us some time for now, and we'll see what the end of January will look like as long as all this stuff moves through over the course of the next couple of days.
Yeah, I think the longer term lesson here is many of you have seen the comparisons of the lengths of recent shutdowns relative to shutdowns in the more distant past. They were brief. Mm-hmm. It's because the issues weren't, and this is common sense, I guess, but I had to stop and think about it. The issues just weren't as vital. We have no fiscal space left, is what I'm trying to say. That wasn't true in the 80s and 90s. Debt to GDP was 40, 50% at most. So there was room to run, and we did indeed run. We're out, arguably, of fiscal runway. God forbid we have an emergency, another pandemic, a war. Absent printing money, which is not unusual, even in America. We did it in the 40s. Mm-hmm. We did it in the going back a little farther, we did it in the 1860s. We had very high bursts of inflation.
That was a tough time
during those two. We all scrimped and saved. I guess we shouldn't be joking about the Civil War, but maybe it's. Maybe enough time has passed. Yeah. But look, my point is we're out of fiscal leg room now. Mm-hmm. So every little dispute is amplified.
Right. And now we sit with a government that seems to be well positioned, I guess, for the next couple months. So, but you're right. These issues will,
weeks,
yeah,
right?
these issues have gone on for the last several years, and this arbitrary ceiling that we set and then bump into, and then we have to do this whole song and dance over and over again. It just seems like that is not going anywhere anytime soon. So that's one aspect of things, is that this is resolved, but from a longer term perspective, fiscal discipline, we were talking on yesterday's show, it's just not something that either political party has shown really any desire to get under control.
They've both really been horrendous,
for
Paul.
25 or 30
They've both
years.
been horrendous.
It hasn't been an issue. So from our standpoint, this is going to continue to be an issue, whether or not the government continues to run into these cliffs. What this means in terms of the impact on federal employees, they will be back paid for the period of time that they were not getting paid for. And then really
you don't save any money. None of this was about saving money.
Oh, no. Really, the crux
or
of
even
it,
cutting spending.
No, none
of it was about any of those fiscal
really more about
issues.
Smaller deal points regarding the American Affordable Care Act and some of its credits and subsidies there. That was ahead of the dispute. You also had just some debates regarding government workers and potential firings of those. But anyway, all this gets put to the back burner for the moment here. The next thing that we move to is just trying to gain sort of any determination as to what the economic impact could be of the government being shut down for 6 weeks or so. There are some pieces that have been written comparing it back to some other shutdowns that we've seen and potentially what it could do in terms of shaving off GDP growth. The Congressional Budget Office had estimated that if the government shutdown were to last for 6 weeks, we're going to come in right around that time frame here, relatively close, that it would reduce the annualized growth of Q4 GDP by 1.5%. I've seen other estimates out there from Oxford Economics that it would only shave off 1% of GDP growth in Q4. Where do you kind of line on the side? I know it's not really clear data evidence one way or another, but rather muted impact is sort of where I would lean, Mark, in terms of its economic impact, the shutdown that we've just experienced here. I'm kind of jumping ahead by saying that we will have this resolved by Friday. So under that assumption,
I'll go with the bean counters who keep track of the components of GDP, which GDP is just overall spending. So it's consumption, which is what we spend, investment, which is partly what we spend, partly what businesses spend, and housing is included in that. Government spending is the other component of GDP. And then there's a little adjustment for net exports because you don't want to double count them. So it's a short-term accounting-based measure of how much we have spent in a given period. GDP is a quarterly statistic. That's different than growth. It's easy to confuse the two. I wouldn't expect any impact on the long-term productive capacity of the U.S. economy, growth. In the short term, it could be a little bit disruptive, and maybe if you're on the cusp of recession, then it does become more concerning. But generally speaking, using history as a precedent, you make up for these shutdowns pretty quickly because, once again, no spending was actually cut. No employees were actually fired. I'm not saying they should have been, but this was not about shoring up our fiscal situation. It was fought over different considerations.
And the other key consideration will be economic data. We have had a freeze in terms of any economic data that we've received, whether it be the jobs report, retail sales, inflationary data. And so the next thing that we turn to is just trying to get a sense for when some of that data will be released. The first report that we will most likely receive, I would imagine by early next week, is the September jobs and inflation report. That was basically already fully baked in and was ready to go prior to the government shutting down on October 1st. So we will likely get that very early next week because all of that data had been accumulated. When it comes to some of these other reports for the month of October and November, when you look at the key categories that us on the show and many economists, investors look at on a monthly basis, whether it's retail sales or inflation, there's been some projections that have been thrown out there based on other instances when the government was shut down and not collecting this type of data.
Right.
December 8th is a projection that I saw thrown out there for the October and November jobs report. It's important to note that the Federal Reserve will get together for its next meeting on the 9th and 10th of December. So it's very likely that they will not have many of these months of economic data when they do get together, it is going to be difficult for all these estimates to be compiled and be put together. So it's just going to be sort of a wait and see, and they'll be kind of going in blindly, very likely.
Yeah, if you think about the Fed, I say this every time I'm on, but I think it's a helpful analogy. It's the economy's thermostat. The economy gets too hot, and specifically what I mean by that is demand exceeds the economy's productive capacity. Demand, overall demand, sometimes called aggregate demand, you hear economists throw that term around, exceeds aggregate supply. When that happens, you get upward pressure on prices. It's unavoidable. The Fed's job is to the extent that demand exceeds supply because it has overstimulated, because it has effectively printed too much money. The Fed's job is to cool the economy down. That's why I make the thermostat analogy, and vice versa. When the economy's not living up to its productive potential, the Fed's job is to give it a boost. It's tough. It would be like asking your HVAC system to function properly without inputting the right room temperature. Should I be calling for heat? Should I be calling for AC? Should I be calling for nothing? If the thermostat, I guess, could ask those questions, that's what it would be asking. That's what the Fed's asking right now. It doesn't have a good reading on the ambient temperature.
Yeah, I just was thinking of my son who's 4 years old in the car will sometimes just say, he'll say turn on the heat, but he means put on the cool air and just doesn't know the expression. It still needs to learn the air conditioning.
So maybe a career as an HVAC technician is not in his,
he's still young. He'll figure it out. We're going to take a quick break here on the Financial Exchange. When we come back, I want to talk specifically about the government shutdown and the impact on the labor market and the lack of data that we've seen. And do we have the prerequisite data that will give us a good sense for where is the labor market at this point? We're going to talk about that right after this break here on the Financial Exchange. Stick with us.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
Hi, this is Chuck Zada from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate planning isn't just about taxes. It's about peace of mind. At Cushing & Dolan, we believe your plan should protect your family, not complicate your life. A joint revocable trust can help you do both. It lets you avoid probate, which means no court delays, no public filings, and no stress for your loved ones. Your estate stays private, and your family stays in control. Our new guide, The Simplicity of Joint Revocable Trusts, also explains how a trust can protect your children's inheritance from creditors, divorce, or bad financial decisions down the road. This guide makes it easy to understand why a joint trust may be the smart move for your family's future. Call 866-848-5699 right now and ask for your free copy of The Simplicity of Joint Revocable Trusts. That's 866-848-5699. or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and this year's race was a tremendous success. If you weren't able to attend but would still like to help our great American heroes, please visit dav5k.boston and make a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
All right, coming back from break here, we were talking in the prior segment about the U.S. labor market, and in particular, one of the things that's been really challenging with the labor market over the course of the last month or so is we've had really no economic data from a federal government perspective to get a sense for where is the labor market at this point in time. So as a result, we've been forced to look at some of the private payroll data providers and other just economists out there for other resources to get a sense for where is the labor market at this point in time. The unemployment rate sits about 4.3%. It's projected that perhaps it had ticked up to 4.36% in October. But what we're seeing now is some different charts that were put together in a piece by Barron's here. And the question I have to you, Marc, is how much stock do you put into some of these, private payroll data aggregators? ADP is a big one. And oftentimes when they were released in conjunction with government data, we largely ignored them. I think they're referenced perhaps in passing, but now they've had their time in the sun over the course of the last month or so. How much stock do you put into some of these reports and some of these data points that are coming out on the private side of things?
I think different bits of information from the private sector could be helpful if you're forecasting. If you're trying to do let me back up and just state it plainly, and then you tell me if this makes sense, Paul. If you're doing forecasting, and most of us are not, I mean, I do it sort of as a hobby, but it's not really part of my most urgent day-to-day duties in my day job at Armstrong Advisory Group, because we're not a macroeconomic advisory firm and I'm not a labor economist. But I have found that if you're trying to do your little forecast of what the payroll change is going to be, and you do that using statistical methods and computer software, if you add to whatever your little model is, what ADP reported this month, which usually comes out within a few days of the DOL's official report, you can improve your forecast a little bit. So I have found, and I'm sure others have found this too, again, I'm not a labor economist, and it's not my kind of full-time job, so I'll just call myself a hobbyist. I found that it's helpful. It does improve. Not just I've found through month-over-month experience. If you go back and test it, you can improve your forecasting a little bit. So there's information in there, Paul. Now, should you and I, as sort of in this context, labor commentators, economic and financial market commentators, should we get all hung up on it? I don't know. This is where I struggle with economic data and the way people use it. There are like a lot of really spicy ingredients. They're sort of good in very small quantities if you know how to deploy them, but you shouldn't take them out of context. That's I think the best I could say about it.
If a family member were to ask you at Thanksgiving in a couple weeks,
I would avoid them. I'm going to stop you right there. I'm already.
If they were to chat with you over some turkey and stuffing and say, "Hey, Mark, how is the labor market been? What would you give to them?" As a generic sort of
that's a good
summation of where do we stand at this point, recognizing that, the data has been murky, I guess, over the last month or so. How would you summarize that to them in sort of the lay terms for just someone sitting at the table with you?
Look, the economy, based on the last snapshot we had, appears to be good.
Yep.
Growth is, and what do I mean by that? Very simply, one concept. Growth is at or above trend, which is about as good as it gets, is the most you can ask for. And this has been the case, by the way, for the past few years. Policies have changed a lot. Tariff policy, monetary policies changing. We can get into that. I think we will a little bit later in the stack that Tucker Silva put together. But it's amazing how under the hood the economy doesn't change much, or changes only very slowly, even in response to big policy changes. So it's good, Paul. It's hard to deny that. Are there concerns? Sure, you ticked off a bunch.
Yep. Labor market, I would say specifically, I know you kind of answer as the economy in general. Labor market, what I would say for, a key couple bullet points is that you have an unemployment rate that has remained relatively steady at 4.3%. Yes, at the lows, it was 3.5%, so we're higher than we were there, but it has stayed very stable at this 4.3%. And historically, I would be telling this person at the Thanksgiving table, that is a very good rate of unemployment, very
good.
full rate there. On the hiring front,
shut up and eat your turkey.
On the hiring front, then we've seen a bit of a slowdown. There hasn't been as tremendous amount of job growth that we've seen in 21 and 22. To be fair, those were extremely robust periods of labor growth that were well beyond what you've seen historically. You've also seen more anecdotal evidence that there seems to be an uptick in layoffs. Unclear if that is
fair,
widespread, that we've seen significant layoffs. You just are starting to see some big headline companies, Amazon comes to mind, and others that are sort of cutting headcount a little bit. And then you've heard also just that those new entrants into the labor market are having a little more difficulty. So that's
all
sort of the way
perfect.
that I would say.
What does all that mean, though?
What does all that mean is that is the labor...
If you think you know the answer to this, you're wrong.
I don't know.
There is no, right.
I don't know, but...
I'm not talking to you. I'm talking to people.
Well, what I would say to investors or friends and family out there, the big focus that the Federal Reserve has very clearly indicated that they are going to be most focused on for the next 6 to 12 months or however period of time is less so inflation that we talked about a lot over the course of the last year or so, particularly around April with the implementation of tariffs. There was a lot of thought put behind this idea that it was going to lead to increased prices. No evidence to that just yet. It's really the labor market. Does it trend into a negative direction where that unemployment rate increases and we see a true slowdown? No evidence to point to that just yet. The next 6 months or so, that seems to be the Federal Reserve's biggest focus. Unfortunately, the challenging part is going to be it's going to be likely not until January or February that you could say you'll have a good grasp and we'll kind of be back running at the regularly scheduled deployment of all this economic data because of the glut that we've sort of created with this government shutdown.
Yeah, we just don't know, which is why it's puzzling that some people are clamoring really loudly for interest rate cuts, big interest rate cuts. Some of them have most of them have political motivations. That's always the case. But you never really know the true state of the economy. These figures that we're talking about, even when we get them, they'll still just be statistics, which means it's an estimate. And that estimate could be high, low. It's never spot on. We just don't know.
Taking a look at markets, we've got the Dow up about 85 points at the moment. The S&P 500 is slightly in negative territory, down about 0.25%, and the NASDAQ is down about 0.2% here. We're going to take a quick break here on the Financial Exchange, but when we come back, we're going to be talking a little bit about U.S. household debt hitting a new record, according to the New York Fed. We'll also be talking about SoftBank, who sold its stake in Nvidia for a whopping $5.8 billion. That and Wall Street Watch right after this break.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Hi, this is Chuck Zada from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001 or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Marc Vonner is the CEO of Veterans Development Corporation. Marc is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Marc comes from a proud military family, including his father Victor and his brother Timmy. Marc talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Marc is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Marc, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Marc Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about joint revocable trusts. Todd, a lot of people think estate planning is complicated or something they can put off. Can you explain how a joint revocable trust can actually make things simpler for couples who just want to protect what they've built and keep things easy for their family?
Sure. Joint trusts are really so underutilized, but they're really the most important and easiest way to do planning. Many people think of two trusts, right? Splitting everything between a husband trust and a wife trust. Well, this already makes it simpler. If you have just one trust, you can both put your assets in the trust, whether you contribute the joint bank account or the joint brokerage account or the joint real estate and rental properties. It's easy. Just put it all into one trust and you're both trustees. So funding is simpler, operation is simpler, and most importantly, you can actually get a better result for moderate estates from an estate planning standpoint. Because on the first death, you get to cram down all the assets that are in the joint trust to get a step up in basis, whereas if you've separated the assets between the two trusts, you're only going to be able to cram down half as much. And if you do the planning right, you can actually use these trusts to get a double step up in basis when the surviving spouse dies.
Learn how you can avoid probate, eliminate estate taxes, protect your kids' inheritance, and keep your money in your family. Request this brand new guide from Cushing & Dolan. It's called The Simplicity of Joint Revocable Trusts. Call 866-848-5800 848-5699. That's 866-848-5699. Or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Following yesterday's strong rebound, markets today are mixed after the Senate officially passed a bill to end the historic government shutdown, sending it to the House. Right now, the Dow is up 0.3% or 143 points. S&P 500 down over 1/3% or 24 points lower. NASDAQ down by 0.8% or 190 points. Russell 2000 is down just over 1/3%. 10-year Treasury yield, no movement today because the bond market is closed in observance of the Veteran Day holiday. And crude oil up 1.33%, trading just below $61 a barrel. Nvidia shares pulling back by 3% after SoftBank disclosed it sold its entire $5.8 billion stake in the chip maker and AI giant back in October, where the firm said it looks to capitalize on its all-in bet on ChatGPT maker OpenAI. Sticking with that sector, where CoreWeave stock is plunging 13%. After the AI infrastructure company posted a disappointing full-year guidance and cited a delay by a third-party data center developer. CoreWeave saw its revenue more than double in the previous quarter, driven by the AI boom, while its net loss narrowed. Meanwhile, plant-based protein company and recent meme stock Beyond Meat saw its loss widen and sales decline last quarter as demand from customers and restaurants fell. Beyond stock sinking 6% today. Elsewhere, Paramount reported growth from its streaming division in its first quarterly report since its merger with Skydance. Paramount also raised its cost-cutting target to at least $3 billion. That stock is rallying 11% at the moment. Occidental Petroleum reported mixed third-quarter results, beating on adjusted earnings but missing on revenue estimates. Shares are up over 2%. And shares in Sony jumped 5% in Japan after the electronics and entertainment company hiked its annual earnings forecast and projected a smaller tariff hit. I'm Tucker Silva, and that is Wall Street Watch. And as a reminder, subscribe to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. You'll get caught up on anything and everything you might have missed right here on the Financial Exchange. Again, search the Financial Exchange on YouTube and hit that subscribe button.
U.S. household debt hits a new record. The New York Fed finds the data that came out in the most recent quarter here was that United States citizens had $18.59 trillion of debt in Q3. That was rising by $197 billion. And the issue that I always have, Mark, with these pieces that use dollar values to indicate the rising record that is reached is that with inflation and no adjustment for inflation, these numbers are always going to continue to get higher and higher. Yeah. And they do this with credit card pieces, the news publications that we cover a lot in the program. And ultimately, to me, there's not a lot to do with these type of pieces. To me, the bigger focus, if you want to look at household debt, is delinquencies. Those are the most important in my mind, whether it's on student loans or credit card debt or mortgages. That, to me, is a much better indicator of how is the U.S. household faring. If those delinquencies start to uptick significantly, then that's an area of concern, certainly, and is worth mentioning. But this idea that numerically we're just going higher in terms of the debt that this country have is not something that concerns me. And from a delinquency standpoint, to kind of answer the point that I posed, sure, we're seeing a little bit of uptick on delinquencies on credit cards, but in terms of the mortgage debt that we're seeing, really low rates of delinquencies there, and nothing that I would lose sleep over at this point.
Yeah, I'll go back to a point I tried to make in the last segment, which is it depends on what you're using the data for. If you're a forecaster, some of these statistics might be useful in your modeling. That's sort of a complex point, but I think it's important to keep in mind. I don't know whether some of these help people predict the change in, say, the broad direction of the broader economy, stuff like that. So we're given an article like this in a publication meant for popular consumption, so we're expected to do something with it. I think the point you made about the trend, you didn't quite put it this way, but the way I would put it is household debt will move in close union with the overall economy. As the economy grows, so will debt. That's normal. So look at debt not in an absolute sense, but as a percentage of, say, disposable income. And if that fraction is growing, you might have a problem because at some point people won't be able to service it. Household debt as a percentage of disposable income has no long-term trend. I'm looking at the series right now. If you Google it, you'll find what I'm looking at. And we're not anywhere near all-time highs or even local.
What do we get in 07 or 08, just to give a basis of comparison as to probably when it, I would imagine, got quite high?
Yeah, because of the burden of mortgage debt. It was, the metric again is debt service payments as a percentage of disposable personal income. That's the series I'm looking at. There are others, but they all give you broadly the same conclusion. Was roughly twice the, well, no, I'm sorry. It was 16% rounding up a little bit versus 11.2% today, and high 11s. Again, debt as a percentage of disposable debt service payments as a percentage of disposable personal income, nearly 12% throughout the 2010s. So we're not at record highs. We're not at red flag levels relative to the more recent era of data. I'm not saying that changes in this might not be predictive of trouble. And if we go into recession, obviously, this is going to be a problem.
Sure.
But so's everything.
SoftBank sells its Nvidia stake for $5.8 billion to fund OpenAI. This is a very interesting trajectory that SoftBank has had here. It's the head of it, Masayoshi Son. I really needed to stutter there with that pronunciation, but I think I did it all right. They have made some huge bets over their time frame where they had bet big on WeWork, which famously crashed and burned. They invested $4.4 billion in that in 2016. They've also made big bets now, most recently in OpenAI, committing close to $30 billion of investment into the company behind ChatGPT. The sale of Nvidia by SoftBank was not an indication necessarily, it seems, that they were pessimistic on Nvidia and its future, but more so they needed the cash to fund some of the huge bets that they're making in OpenAI. This particular fund, the Vision Fund that is behind SoftBank, they are just the blank check company. They write huge bets to a lot of big tech companies out there with the hopes that they cash in big. They've had some massive successes with Yahoo and Alibaba, and they've had some massive failures with WeWork, and particularly in 2022 and 2023, they just lost their shirt in terms of how the fund has performed. But they have a whole lot of money behind them, and they better hope that this OpenAI bet hits, because they are the biggest investor in OpenAI at this point behind ChatGPT with that $30 billion commitment.
Are they publicly traded? Forgive me, I don't follow Japanese financials.
I do think that they are.
Okay, all right. You don't have to squirm. So they're basically, you're not squirming, but you know what I mean.
They are.
I could have looked that up. Sorry. So they're an investment bank. They're like a Goldman, what we used to call investment banks here. They're like a Goldman Sachs, but a lot narrower. SoftBank. What I'm trying to get at here is, why should people care? These guys they're just like a growth shop.
They're crazy growth. Yeah, they just make huge bets, and in particular, the reason that this gets some notoriety is that it's a sale of Nvidia, which has done tremendously well for them. They had lamented at selling Nvidia before it really rose to prominence over the last few years or so, but again, really piling all of their resources into OpenAI. We'll see how that plays out for them. We're going to take a quick break here on the Financial Exchange, but when we come back, we're going to be talking about the idea of a 50-year mortgage. Is that a terrible idea? We'll talk about that right after this break.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
Hi, this is Chuck Zada from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com. Estate planning isn't just about taxes. It's about peace of mind. At Cushing & Dolan, we believe your plan should protect your family, not complicate your life. A joint revocable trust can help you do both. It lets you avoid probate, which means no court delays, no public filings, and no stress for your loved ones. Your estate stays private, and your family stays in control. Our new guide, The Simplicity of Joint Revocable Trusts, also explains how a trust can protect your children's inheritance from creditors, divorce, or bad financial decisions down the road. This guide makes it easy to understand why a joint trust may be the smart move for your family's future. Call 866-848-5699 right now and ask for your free copy of The Simplicity of Joint Revocable Trusts. That's 866-848-5699. Or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Your next incredible vacation is a click away. And if you act fast, you could be on St. Croix to experience their Crucian Christmas Festival, taking place this December through early January. Discover the magic of this long-standing tradition with incredible food, music, and entertainment, or just go soak up the sun, stroll along white sand beaches, and feel the rhythm of the heartbeat of the islands. The USVI is America's Caribbean paradise. Plan your escape now at visitusvi.com. That's visitusvi.com.
Piece here from Bloomberg by Alison Strager. A 50-year mortgage, it's not a terrible idea. I'm going to tell you why I think it is a terrible idea. For many years, most of us are accustomed to the 30-year fixed mortgage out there. And when you're talking about the 30-year fixed mortgage, typically the way that rate is determined is by using the U.S. 10-year Treasury as a benchmark to dictate what rate that a bank is going to assess you when you borrow the money to buy a house and put a mortgage together. There are very few securities. You could make some arguments perhaps on a 20-year Treasury or a little bit shorter than that could be used to price a 50-year mortgage. And oh, by the way, if you're the bank, imagine lending out money for a 50-year period. You're taking on a whole lot of risk as a lender to commit to 30 years, but to commit to 50, almost twice that period of time, is a significant risk. You run into all sorts of complications as the lender. If I'm the borrower, Paul Lane takes a 50-year fixed mortgage, I could lose my job, get divorced.
A bank could do this now, right? They just wouldn't be federally. They're going to lavish it with federal subsidies,
right,
is the issue here, I think. Like, as a private lender, you do whatever you want. Correct me if I'm wrong.
You could, yes.
They just don't, because they all want to conform, and they want to. They ultimately want to securitize their. Sorry, this is just off the top of my head, not my area, but as far as I know, everybody conforms to the 30-year structure because it's easier to move the loan off your books if you want to sell it, for example.
Yeah, the mortgage-backed securities market far more liquid for that than a 50-year one that just doesn't exist.
The government would have to actively aid and abet this practice,
right? Provide some liquidity for it, and then you have the other issues here that if you lend at really low rates of interest and interest rates run up, as the lender, you're missing out on that opportunity cost there by being locked in for a significant period of time.
Yeah, so banks may not want to hold on to these suckers.
To me, that's the biggest thing is for a consumer, what are some of the downsides to it? I mean, yes, your monthly payment gets lower, just like the trick that they'll do to you if you go buy a car. They'll stretch you out on monthly payment by just making the loan longer. Same thing would be applying here. Oh, don't worry, Mark, we can get you in this car for $250, $500 a month. Oh yeah, you're just gonna have to have a 10-year auto loan that you're paying interest on. Same sort of concept here. The 50-year mortgage payment is gonna be pretty low relative to the 30-year one. You're not building a lot of equity by doing that, and you're not making a significant amount of progress paying down the principal.
Yeah, if you stay up at night worrying about the potential for negative equity now, you'll be worrying about that potential for potentially your whole working life under a 50. I'm not saying it's a bad thing. I'm willing to let the market sort this out. But that's not really actually what's happening here. The government will be actively encouraging or will be facilitating the development of this market through, again, subsidies and regulations. And Strager makes good. I mean, I'm in her camp as a sort of libertarian-leaning occasional economist. That's her full-time job, and she's a PhD. So she knows her stuff. She outlines the pros and cons pretty clearly. There's no way consumers will understand what they're getting into here, though. To your point, car dealers find it very easy to trick us, as you put it, because most of us can't do, myself included. I have to spreadsheet it out or something.
I have to have the calculator next
Yeah,
to me.
you do. We have our little financial calculator, so we know what we're paying in interest over the life of a loan, but it is not straightforward. It is complex, and it's fully disclosed when you take one of these suckers out, I guess. But
buried a little bit. And again, important to note here, this is all theoretical chatter. There is not imminently going to be a 50-year mortgage issued, but it's just something that has been...
And what does it do for the housing? We haven't talked about implications for the larger market, though. Presumably it increases demand. That's going to push prices up.
Yes.
All else equal, right?
And
if it makes houses more affordable?
The altruistic idea behind this is trying to get more people in houses because of the affordability issue. But to me, this is not attacking the right part of the problem. It's the supply side that you should be attacking. I don't think that really Washington, D.C. has any real fixes to fix the supply side. So that's why perhaps you turn to the financial instruments as a way to combat that. But I don't know if this really solves it all.
No, if you lament that home prices are too high, this is not a prescription for that. This will push prices, I assume, all else equal, by making houses more affordable, by enabling, as you pointed out, people to stretch their payments out, will make it easier to buy a house, and thereby, again, all else equal, push up prices.
Yep. We will see.
Estate planning isn't just about taxes, it's about peace of mind. Cushing & Dolan believes your plan should protect your family, not complicate your life. A joint revocable trust can help you do both. It lets you avoid probate, which means no court delays, no public filings, and no stress for your loved ones. Your estate stays private and your family stays in control. Their new guide, called The Simplicity of Joint Revocable Trusts, also explains how a trust can protect your children's inheritance from creditors, divorce, or bad financial decisions down the road. This guide makes it easy to understand why a joint trust may be the smart move for your family's future. Call 866-848-5699 right now and ask for your free copy of Cushing & Dolan's guide called The Simplicity of Joint Revocable Trust. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
One last note on the housing market. First-time home buyers have had a very difficult time over the course of the last few years, a combination of prices rising significantly and mortgage rates ticking up pretty significantly as well from the lows that they were in 21 or 2022. The first-time home buyers represented only 1/5 of homes sold during a 12-month period ending in June. That was a record low. There was also some coverage on a story from the National Association of Realtors where the median home age for a buyer has reached 40 in this country. Just 4 or 5 years ago, the median age for a first-time home buyer was 33 years old. And if you go back to the 90s, that was 28 or 29. And that sort of speaks to, Mark, some of the issues that we were covering with the 50-year mortgage or some of those considerations. It's trying to address the fact that for the first-time home buyer, it's a really difficult market on the housing side of things here. So we'll see if anything can be done there, but not too optimistic that any fix comes anytime soon here. Taking a look around at markets as we head towards the bottom of the hour here, the Dow Jones is up close to 200 points. The S&P 500 is off about 0.33%, and the NASDAQ is off close to 1% after a pretty significant rally yesterday on some of the optimism regarding the government shutdown wrapping up here. The bond market is closed today, so no real action on the U.S. Treasury market today. It will be reopened tomorrow, and we've got oil and gas, U.S. Texas up about 1.33%. That's all the time that we have for the first hour of the program here, but stick with us. We'll be right back after this break. We've got a lot more to cover here on the Financial Exchange.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. Estate planning doesn't have to be complicated. Cushing & Dolan's new guide, The Simplicity of Joint Revocable Trusts, shows couples how to stay in control, avoid probate, and help protect what they've built for their family. Call 866-848-5699 right now and ask for your free copy today. That's 866-848-5699. Or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Marc Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
This is Brittany Vonner. I'm a registered nurse who is now working as an assistant project manager at Veterans Development Corporation. Working with my father, Marc, has been an incredibly rewarding experience. Our company is dedicated to serving VA hospitals and veteran communities. We don't just build facilities, we build environments that support healing, resilience, and family. We are so proud to see our work directly impact the lives of veterans and the professionals who care for them. This rich history is why we care so much about supporting great organizations such as the Disabled American Veterans Department of Massachusetts in the work they do to care for our veterans.
Join Veterans Development Corporation in thanking our great American heroes. Please visit dav5k.boston to show your support today.
The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Owning Real Estate in Retirement. Mike, for someone who wants to own multiple properties in retirement, maybe a warm weather and a summer property, What do you end up doing as far as, trying to negotiate and navigate that decision?
Well, it's a lot of questions to answer. How much time are we going to spend in one place versus another? Where am I going to be a resident? If I am, leaving between two different homes, where do I feel comfortable being a resident? I get this question all the time. How much will I get in tax savings, for instance, by moving to a no income tax state? And what ends up happening, though, sometimes is they make that decision based on income tax and don't realize where a lot of the cost savings comes, which is estate taxes. And so if I'm going to own multiple properties, where do I intend on actually making my residency? And will I be able to commit to that for the long term is an important one.
Another piece there, look, at a certain point in everyone's life, that travel and moving between two places and even maintaining two places becomes challenging. When do you typically see those kinds of conversations being navigated?
For most folks, I see it in the 70s and early 80s. That's when this stuff starts to change for a lot of people, but ultimately it's customized to each individual, and you might be able to afford one scenario if you're willing to rent out your property for a period of time. Sure. It really comes down to customizing for your situation.
Our guide this month is titled Owning Real Estate in Retirement, and you can request it by calling 800-393-4001 or going to armstrongadvisory.com. That guide again is titled Owning Real Estate in Retirement, and you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Paul Lane and Marc Fandetti.
A happy Veterans Day to all of our listeners out there, and a big thanks to all those who have served and protected our country here. We kick off the second hour of the program here, taking a look around at markets in relatively mixed territory. The Veterans Day holiday only impacts the bond markets. They are closed today. However, the stock market is open and the S&P 500 off about 0.25%. The Dow Jones up about 180 points, so not too big of movement there. We'll kick off our start here with a subject that we've covered probably ad nauseum, but it is the most important story when you're talking about the stock market and the growth that we've seen this year, is the idea of the AI bubble. I'm not the first to bring it up. I won't be the last to bring up the subject, but over the course of the last probably 6 months or so, there has been a lot more scrutiny on the amount of expense that has been lined up to build out the infrastructure to develop artificial intelligence in this country. The cycle sort of kicked off with the release in November of 2022. We're coming up on 3 years now when ChatGPT, or a version of it, was unveiled that just got mass popularity and adoption. I believe ChatGPT sits around 700 million plus weekly users at this point, so it has become much more part of many people's day-to-day usage. Now what you've had as a result is many companies out there scrambling to become the dominant player in the space, and as a result of that, it takes billions and billions of dollars to build out the infrastructure that is required to harness and sort of materialize the computing power that's required here to make these large language models or anything else on the software side that deals with artificial intelligence effective. And there's a piece here that was done by Russell Branham that sort of reframes the way that you should think about the AI bubble. That a bubble doesn't have to be something that we talk about as an apocalypse, the sort of the end of the world, that if this bubble is to pop, that it will be some, huge problem. What we saw, to make the parallel comparison to the internet age in the late 90s, there were some companies that came out of that very successful and were built on the backs of all that infrastructure investment. Think the Googles and Amazons of the world, but there were many others that crashed and burned and never really saw a material gain from that build out. But also note that it took time before everyone had laptops on their desk and the Wi-Fi connectivity was as widespread as it is in this country. It's taken a long time to get there. The same thing could be said here out of artificial intelligence and its build out. The question is just going to be, how long are investors willing to be patient to see any sort of material development on the revenue growth side of things for all of the money that's going to be invested in building this thing out?
And will profits, the most interesting take on this, I think, is by Michael Burry and other famous speculators, people who are known for their short selling acumen, meaning they make a bet that a share price or a market will fall. We don't have to get into the specifics of that, but there are people who made a lot of money in the financial crisis of 2008 and 9 who are now sounding warnings about the way companies are doing their accounting for the stuff they're buying. All these hundreds of billions, $3 trillion will be needed to invest, will be needed by these so-called hyperscalers, these people building these big data centers over the next several years. That's 10% of 1 year's worth of GDP. So an enormous amount of money is going to go into this. How are they going to account for that? And there's this interesting take by some of these prominent short sellers that, earnings of Meta and others will be overstated significantly because they've extended the depreciation schedule, if you will. It's botching the terminology a little bit here. They've extended the estimated useful life for accounting purposes of some of these assets. Chips become obsolete really fast, right?
3 to 5 years maybe on some of these new ones.
Like at best. I think Nvidia makes the joke now that they can't give away last year's chips.
Yes.
So is that worthless if you bought them? Mm-hmm. And if so, should that count against your earnings? Companies like Meta and others are saying no. Some have made the point that their earnings may be overstated significantly, 20, 30%. Now, these are short sellers who may be talking up their own book, but earnings may be significantly overstated for the next several years, all else equal, as a result of this accounting, I'll call it a sleight of hand that may not be fair.
What we've seen is valuations have soared in most any company that is touching this space, but there is a huge fork in the road of software continues to be developed and iterated very quickly. When you look at artificial intelligence, there's a lot of work done there. But on the computing side of things, when you're building out computing capacity, it is much more the traditional slow crawl of construction and power and utility use that takes a long period of time to get online. So you have hundreds of billions of dollars committed to building out these data centers that are faced with the challenges that the technology sector typically doesn't have to deal with as much, that they're able to develop and innovate a lot quicker. But when you're waiting on a data center down in Louisiana that's 10 Home Depots long, there are a lot of pitfalls that you can bump into on the construction side, on the amount of resources that are dedicated for that type of plant. So there's that.
You're not exaggerating either. These enormous completed data centers that don't have juice.
Exactly. Yeah. And you have to, the electrical demand to get hooked up to the grid, that can take time. And there's a lot of money being invested. And the other piece is that I have had trouble, and I don't know if you've ever found a story that indicates this, that one company adopting artificial intelligence and transforming its business. And I listen to a lot of material that is pro this technology, whether it be podcasts or things of that nature that are on the cutting edge of technology that in their own best interest really hype up its potential benefit. But I just wish I had a concrete example of, and I'm talking about the newer artificial intelligence because, to be clear, Google and Facebook have already cashed big checks from it. This in a different way, machine learning, that kind of thing with artificial intelligence. But the newer iterations of it, I just have not heard.
Machine learning is definitely not new.
Yeah, they are the algorithms and what you see when you log into your Instagram account or YouTube. Those are things that were built out from machine learning and algorithms that are of yesteryear. But so I just want to be clear that I know that they've benefited from that. But on the newer side of things, where companies have said this has been transformative and it has shifted our business, I just haven't heard enough of those stories yet. McKinsey and others have done
a lot of hot air
analysis where there has been cost cutting that has been done as a result of the use of artificial intelligence, but nothing that has transformed the business. So that's where I have the most trouble. I'm not downplaying the technology, but I just wish I had some more concrete
We should be
examples.
skeptical. I mean, in our day jobs, we're fiduciaries. We safeguard people's money. It's our job to be skeptical and not jump on every bandwagon. So that's in our nature. But MIT, a group of researchers at MIT earlier in the year did a study, and they concluded that just 5% of integrated, I'm reading directly from it, from the executive summary, just 5% of integrated AI pilots are extracting value, while the vast majority remain stuck with no measurable P&L impact, i.e., they can't figure out how to deploy this stuff profitably. Ask yourself, have you used Microsoft Office lately? Of course you have. I use PowerPoint, Excel, Word. We all use the suite. It is my experience using Office is not materially different, and I'll throw Outlook in there too. And some of these programs had different names in the 90s. Is not materially different than it was in the 1990s. And I would defend that statement. Excel does not do much more functionally. If you don't know how to do data analytics yourself, it's got some helpers in there now. But other than that, Excel experience is the same. The Word experience is mostly the same, other than those annoying prompts about how to finish a friggin' sentence. Like I don't know what's in my head when I'm writing, when I'm midstream writing, and I need them to distract me with a prompt. So-called Copilot. I'm going to be a little cruel here, but blunt and say it's useless right now. That is not additive to mine or anybody's productivity. I would welcome people pointing out cases of it being productive and additive to helping them do their job more quickly. But to this point, I have not experienced that, and I'm a pretty intense user of it. I like exploring new features. I'd welcome it. Largely, you ask Excel's GPT Copilot add-on to build you a table. It struggles with very basic instructions, even when you're very specific. I've heard some coders say, well, ChatGPT is good for coding. You tell it what you want. But you have to spend all this time cleaning up their crap code, in my experience. Maybe it's better than a newbie right out of college helping you, but it's not going to replace anybody anytime soon. My point here, sorry for rambling, is that think about your own experience now versus the 90s. In the 90s, this stuff was life-changing. We went from primitive word processors to Microsoft Word to being able to use Office from home and videocom. All this happened within a few years in the 1990s. Sending attachments by email, they got bigger and better. We've been stalled since then. In my view, as someone who's used the Office suite consistently for 30 years, which I think is where the bulk of the life-changing experiences for those of us in desk jobs has been.
I think that's fair. We're going to take a quick break here on the Financial Exchange. When we come back, we're going to be talking with Corey Adams from Robert Half, going over some of the talking points on their recent survey on year-end bonuses. We're also going to have trivia here, too, right after this break here on the Financial Exchange. Stick with us.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com. Estate planning isn't just about taxes. It's about peace of mind. At Cushing & Dolan, we believe your plan should protect your family, not complicate your life. A joint revocable trust can help you do both. It lets you avoid probate, which means no court delays, no public filings, and no stress for your loved ones. Your estate stays private, and your family stays in control. Our new guide, The Simplicity of Joint Revocable Trusts, also explains how a trust can protect your children's inheritance from creditors, divorce, or bad financial decisions down the road. This guide makes it easy to understand why a joint trust may be the smart move for your family's future. Call 866-848-5699 right now and ask for your free copy of The Simplicity of Joint Revocable Trusts. That's 866-848-5699 or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck Zada from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001 or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is powered by Circle K Convenience Stores. Circle K is now the official convenience store of the DAV Department of Massachusetts. On behalf of Circle K, thank you, veterans, for all you've done.
As promised, we are joined by Corey Adams from Robert Half to talk a little bit about year-end bonuses. Corey, thank you so much for joining us today.
Good morning, Paul. Thanks for having me.
Corey, so you guys did a survey of 2,000 U.S. professionals and got feedback regarding what they anticipated that their bonuses would be for this upcoming year. What were some of the major takeaways that you had? And another question there is, was a significant percentage of these that were surveyed with companies that do give year-end bonuses? Like, how prevalent is that within the workspace in the country here?
Sure. So according to the research, let's start here, nearly half of workers, about 46%, said that they received a smaller bonus than they expected or no bonus at all in 2024. Now, the other side of this is in a separate Robert Half research and a survey that we conducted, it found that 53% of workers said that they'd be willing to switch employers for one offering stronger bonuses incentives. And so to answer the second part of the question, yes, the data set that we use was tailored towards employees across the domestic U.S. who, as part of their compensation package, would receive some form of bonus option.
Gotcha. For heading into 2026, what is sort of the bonus, year-end bonuses? What does that mean for business confidence going forward? Are you seeing that employers are a little more hesitant to give as big bonuses as they did previously in 24? And sort of what does that mean for the labor market and perhaps consumption going into 2026 here?
Sure. So a little bit of both on this. So, I mean, thinking about last year truly was kind of a mixed bag for bonuses. As I just stated from our research, nearly half said that their bonus was significantly smaller or was non-existent. So clearly it's a sign that some employers are being a bit more cautious with variable compensation. Now, that being said, many companies still rewarded their top performers, signaling that retention remains a top priority even when their budgets are tight. So we all know that ultimately bonuses are often a clear indicator of how companies feel about their financial position, their financial performance, as well as their future prospects. So anytime you see that gets scaled back, it can certainly suggest some level of uncertainty or tighter margins. But, here's the other thing. We're also seeing some signs of optimism. Our recent 2026 salary guide shows that some companies are actually focusing on total compensation. This is a big theme here. So it's not about just pay. It's also about offering flexibility, career development, and recognition. And all of this is being done in an attempt and a design to keep morale high as companies are heading into 2026.
What would be some of those example there with flexibility, career development, and recognition? Those are kind of words that are thrown around, but is it more remote work? Like, what does that actually materialize into on the employer side of things, do you think?
Sure. I'll give you a few examples. So obviously around this time of year, a number of conversations are going to play out, and some of them might not go as well as some employees would like. Just a reality of the kind of the market and the climate that we're in. So smart companies are taking a little bit more of a holistic approach in this area, particularly as it pertains to retention. So when cash bonuses are not feasible, they're not an option, they're not in play, there's a few things that we're seeing that many companies and organizations are offering instead. So the first one, to your question, is additional paid time off and flexible schedules, which we know with flexible schedules, that's certainly important more nowadays, particularly those with families and young kids. The second thing that we're seeing is professional development stipends. And by the way, this could come in the form of online certification and online class. And this is sort of a double win, because if you think about it, if you're paying for your employee to develop a new skill set and you're upskilling them, they're going to have the opportunity to sort of bring that back and pour that into the organization. So it's a win-win for both sides there. And then the last thing that we're seeing in the absence of cash bonuses is expanded benefits like wellness incentives or even remote work options. And so obviously the remote work we've talked about for a number of years here, and this could be an incentive that could be offered to an employee in the absence of a bonus that might not have been afforded the option to do any sort of remote work in the past.
Great information there. Corey Adams from Robert Half. Thanks so much for the time today, Corey.
Thanks, Paul. Have a great day.
All right, time for trivia here on the Financial Exchange. And on this day back in 2022, cryptocurrency FTX, founded by Sam Bankman-Fried, filed for bankruptcy amid accusations of financial mismanagement and criminal misconduct. Bankman-Fried was convicted of fraud and conspiracy and sentenced to prison in November of 2023. So our trivia question today: how long is Sam Bankman-Fried's prison sentence? Once again, how long is Sam Bankman-Fried's prison sentence? Be the fourth person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the fourth correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Apple's Restraint finds fans as AI spending faces scrutiny here, a piece from Bloomberg. Apple is one of the companies of sort of these magnificent seven that we talk about so frequently on the show that hasn't spent a significant amount on developing artificial intelligence. I think perhaps speaking for them, they could be the beneficiary of its development, as they are a huge player on the hardware side of things. Many of us walk around with their iPhones every single day. So if these apps continue to develop and are successful, you'd think that, Apple benefits from being the host on the platform. But their capital expenditures this year are $14 billion, compared to its peers such as Microsoft that will spend up to $94 billion, and Meta, which is half the size of Apple, is set to have expenditures of more than $70 billion in 2025. So as a result of that, Apple has sort of sat on the sidelines of this trade that hurt them earlier in the year, where a lot of the companies that were heavy in artificial intelligence got a significant run up in their stock price. But more recently, it's benefited them a bit, as there's been some concerns that have arisen regarding all of those capital expenditures that I alluded to there. So we'll be interesting to see if Apple makes more investment in artificial intelligence, but sort of taking a wait and see approach here at the moment. We're going to take a quick break here on the Financial Exchange. When we come back, we're going to have the answer to our trivia question and Wall Street Watch and much, much more right after this break.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hi, this is Chuck Zada from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about joint revocable trusts. Todd, for couples who already have wills in place, why might it make sense to look at a joint revocable trust, and what can it do that a simple will can't?
Yeah, this is important because a lot of people believe that wills are an estate plan, when really a will is a won't. I've said it many times. It won't avoid probate. It won't reduce estate taxes. It won't protect assets from the nursing home. You're going to need some kind of trust to do that. So that's the most important reason why a will is not enough. Then you need to think about, well, what kind of trust are you doing? Well, in this case, we're talking about joint trusts. And boy, folks, these are so underutilized, but they are really powerful for moderate estates. And today, moderate estates are, below 15 million with the exemption as high as it is. So you can actually make it easier for folks. Put all the assets into this trust. You can jointly put your brokerage accounts and real estate in the trust. It's simple. You don't have to split assets between two trusts. Ease of operation, and it's going to reduce estate taxes, avoid probate, and provide a bloodline plan for your family, even to the extent where if you want to protect it from future creditors and divorces of the kids, you can do that in the trust as well. And the will won't do any of that.
Cushing & Dolan have been helping families like yours for more than 40 years now. Learn how you can avoid probate, eliminate estate taxes, protect your kids' inheritance, and keep your money in your family. Request this brand new guide from Cushing & Dolan called The Simplicity of Joint Revocable Trusts. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
After yesterday's strong rebound, markets today are mixed territory after the Senate officially passed a bill to end the historic government shutdown, sending it to the House. Right now, the Dow is up by nearly 0.5% or 217 points. S&P 500 is down about 0.25% or 18 points. NASDAQ down about 0.75% or 184 points. Russell 2000 is down about 0.25%. Bond market closed today in an observance of the Veterans Day holiday. And crude oil up nearly 2% higher, trading at $61.17 a barrel. Nvidia retreating 3% after SoftBank disclosed it sold its entire $5.8 billion stake in the chipmaker and AI giant, where the firm said it looks to capitalize on its all-in bet on ChatGPT maker OpenAI. Sticking with AI, where CoreWeave stock is plunging 13% after the company posted a disappointing full-year guidance and cited a delay by a third-party data center developer. CoreWeave saw its revenue more than double in the previous quarter, driven by the AI boom, while its net loss narrowed. Meanwhile, plant-based protein company and recent meme stock Beyond Meat saw its loss widen and sales decline last quarter as demand from customers and restaurants fell. Beyond now down 8%. Elsewhere, Paramount reported growth from its streaming division in its first quarterly report since its merger with Skydance. Paramount also raised its cost-cutting target to at least $3 billion. That stock is jumping 10%. And Occidental Petroleum reported mixed third-quarter results, beating on adjusted earnings but missing on revenue estimates. However, the shares are up over 2%. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question, how long is Sam Bankman-Fried's prison sentence? That would be 25 years. Chris from Wakefield, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Chris. And we play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
In the previous segment, we were talking a little bit about Apple's positioning as it comes to the artificial intelligence wave, how they perhaps have not invested, or well, they haven't invested as significantly as some of their mega cap peers. But Mark, you had a follow-up question for me on this subject.
Yeah, you follow these stories closely. So where do its critics think Apple should be spending more? Because these articles, when I come across them, are always very vague. Is there a particular area where they think they're falling behind their competitors?
One would be on, you could say that perhaps that they should be developing their own large language model, and that should be incorporated with Siri, which is just useless in my view at this point on their devices.
So is Siri inferior to the Google operating systems version of an AI assistant?
The general feedback on Siri from personal experience, and also I believe from many other users out there, is that it lags behind the large language model capabilities of ours. I mean, the speaking aspect is differentiated from ChatGPT or Gemini or some of these others, but it pales in comparison the user experience using that versus some of these other large language models.
And is that moving people to somebody else's operating system, though? Or is it just kind of a nice thing to have?
Nice thing to have. I think that...
Well, then why would they...
Yeah, that's one. The reason that they could be a beneficiary, and perhaps that your skepticism is right by saying, do they really have to invest a significant amount?
Where are they falling
Ultimately,
behind?
they could create what is the walled garden here of any type of app innovation that comes about through artificial intelligence is going to have to be hosted on one of Apple's platforms, whether it's the iPhone or any of the other hardware devices that you use. So ultimately their services division, which is going to take that 25% revenue cut of anything that's launched on their system, on their iOS system for applications download, you could argue that, hey, they're going to sit right there as sort of the entryway into where all of these innovative apps would be posted in the first place. So why do they need to spend the billions of dollars to do it? The counter argument would be the reason that OpenAI went out and hired it's Bonnie, the one who designed
Joni Ive.
Joni Ive, thank you, is because they want to create their own hardware system that would supplement or not would supplant the iPhone there. So that's sort of the pros and cons of the position that they sit in at the moment. But other than the Siri front, I can't really think of anything. Also, its design of its own chips, that's another aspect here that if they could utilize that to sort of further enhance their position with the custom chips that they have in place, maybe that's their play there.
Yeah, okay. I think you've done a great job of explaining it. It's just still very non-specific. These criticisms, not based on what you just told me, but based on the articles that I occasionally read on this subject, they seem very non-specific. Well, yeah, Apple hasn't jumped on the bandwagon and they're being punished. Well, what do you think they're missing out on specifically, and how is that likely to hurt them in 2, 3, or 5 years?
And to be fair, in their history, a lot of times they have come in late to the party on technology trends, but come out with the best product after the fact. The iPhone is an example of that. The PCs, the Mac PCs that they developed at some points of time were better than the competitors out there, and then they took a foothold after the fact. They weren't the first, but they became the best.
Okay.
We'll see.
That's helpful. Thank you.
The U.S. Virgin Islands isn't just a postcard, it's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Magens Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
First Brands, a little-known company that has got a lot of negative notoriety over the course of the last few months here regarding its business practices and sort of shining a further spotlight on the private credit market. The new CEO who's taken over for First Brands, for listeners out there, that it's an auto parts store that got all tied up in a massive scandal with over leveraging themselves to many different creditors out there. The new CEO who's taken on the First Brands role, Charles Moore, testified that the founder of First Brands ordered the transfer of hundreds of millions of dollars of corporate cash to his personal bank account and businesses that he controlled. He also testified, that he uncovered evidence of massive financial fraud at the company, including fake invoices and double pledging of collateral. So basically taking an asset and pledging it for two different loans out there. 3 members of the management team have admitted to doctoring invoices to the new chief executive, Charles Moore, in order to secure financing. So, Mark, clearly a significant amount of fraud, it appears, under the hood here at First Brands. And that would be the argument that you could have if you are not concerned about the glut of private credit out there, that perhaps this is just one bad actor and an example of financial fraud, just a one-off, but others have just raised concern that perhaps this is more prevalent in the space because of the just explosion of the private credit market over the last 5 to 10 years.
Yeah, I think it's the latter. There will be other. Jamie Dimon used the cockroach analogy. I think he's probably right. Financial conditions. We don't know if this James fellow is guilty. The anecdotes are a little
alleged,
comical. Yep. Because they're so audacious and flagrant. It seems like he wanted to get caught. Double pledging of invoices, using them as collateral to get loans, using getting multiple loans on the same collateral, but like getting multiple mortgages on the same house.
Yeah, on these
which
practices,
you can actually do. Maybe that's not a great example, but lying to
you're just
lenders about.
If you are going through these business practices, you're just waiting for it to blow. You're waiting for it to catch up.
You're
with
definitely
you.
getting bolder. It seems like. But I think the key point, others have made this point, is that financial conditions are quite loose. I naturally blame the Fed for that because they're responsible for financial conditions. And when you create frothy conditions, and they almost certainly have. We spent the first hour talking, part of it anyway, about a potential bubble in AI and elsewhere. Invariably, that attracts bad actors, and you get stuff like this. What's equally puzzling is how big institutions that lent them money or otherwise pronounced on the creditworthiness of these loans missed all this stuff. So there's always that aspect of stories like this, too. Who was doing the due diligence on this stuff, meaning who was making sure that, in this case, First Brands collateral was actually existed, which apparently it didn't.
Yeah, whenever you have froth or a lot of demand in a market, it always seems like companies are able to manipulate that demand and start to get a little less scrupulous with some of their business practices.
The accounting scandals in the late 90s happened during a boom. You would think, times are good, you don't need to cut corners. No, for some reason, these people who are kind of sociopathic, I guess, to begin with, the temptation just becomes too great.
Greed, yeah. That's the story. We're going to take a quick break here on the Financial Exchange. When we come back, we're going to be doing a little bit of Stack Roulette right after this.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Marc Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
This is Brittany Vonner. I'm a registered nurse who is now working as an assistant project manager at Veterans Development Corporation. Working with my father, Marc, has been an incredibly rewarding experience. Our company is dedicated to serving VA hospitals and veteran communities. We don't just build facilities, we build environments that support healing, resilience, and family. We are so proud to see our work directly impact the lives of veterans and the professionals who care for them. This rich history is why we care so much about supporting great organizations such as the Disabled American Veterans Department of Massachusetts in the work they do to care for our veterans.
Join Veterans Development Corporation in thanking our great American heroes. Please visit DAV5K.Boston to show your support today.
Estate planning isn't just about taxes. It's about peace of mind. At Cushing & Dolan, we believe your plan should protect your family, not complicate your life. A joint revocable trust can help you do both. It lets you avoid probate, which means no court delays, no public filings, and no stress for your loved ones. Your estate stays private, and your family stays in control. Our new guide, The Simplicity of Joint Revocable Trusts, also explains how a trust can protect your children's inheritance from creditors, divorce, or bad financial decisions down the road. This guide makes it easy to understand why a joint trust may be the smart move for your family's future. Call 866-848-5699 right now and ask for your free copy of The Simplicity of Joint Revocable Trusts. That's 866-848-5699. Or request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Remember, you can watch the show live every day on our YouTube page. We'll have breaking business news, and all of our content is also archived. So if you want to see an interview or a discussion about a specific topic, it's all there with the click of a button. Just search the Financial Exchange Show on YouTube and be sure to hit that subscribe button.
All right, we are back for a little bit of Stack Roulette. Mark, I will let you bad lead off. I know you've got some zany, kooky story for us, or perhaps some more chatter about the Fed.
No, a story about reverse mortgages in the Financial Times caught my eye for what it's worth. Not something we talk about a lot, not something I know much about, frankly, so... I found this interesting for what it is worth. Cash-strapped American seniors, the Financial Times reports, are turning to reverse mortgages, a controversial type of loan. Do you agree with that statement? Are they controversial?
Yes.
Okay.
They've been sold under manipulative pretenses in the past.
Okay, so people not knowing what they were getting into,
Yes.
not understanding. What is the biggest... Okay, so the point of this story is that demand for these suckers ticked up, rose more than 6%, the number of federally insured mortgages did, the Financial Times says, in the last... in the 12 months ending September 30th. It doesn't appear, by the way, that's the number of reverse mortgages is well below its all-time high, which was hit in the late 2000s. Maybe that was when the oldest of the baby boomers just began to enter retirement and needed that additional income. And the use of these has has been trending. That's not too strong a word. Trending down, way down. It's just a fraction of what it was now, of what it was in the late 2000s today. But manipulative practices, you mean people were goaded into getting into these things, not realizing that they lose their house at the end of the term. Like when you die, the house goes to the lender.
Yeah, there's a lot of costs regarding the setup of these loans. So closing costs, origination fees, mortgage insurance premiums. So there was manipulation historically by those who were preying on seniors and selling them by perhaps not disclosing some of the higher than normal closing costs and some of the other issues that went in with closing.
So like any mortgage, there are lots of fees.
There are a lot of fees that are associated with it. It's complex in terms of the age, the occupancy, some of the rules surrounding it. There's some complexities there that just people would have to be aware of. You also have just the general financial principles that interest continues to snowball, right? You're borrowing against your equity at a interest rate in the house. And so you're not making payments on that interest that accrues, and so as a result, you're eroding away at your equity. That should be understandable for anyone who's taking that out. That's not a new concept, but that is certainly an issue that people just have to be aware of, and of course, the risk of the impact it has on your estate or your heirs. But all those things you would think that they would be understood. Just something that there's been instances of problems with in the past, just in how it's sold. Not to say it can't work for some folks, but everyone's situation is different. But usually it does have a bad name that makes advisors
it does have a negative connotation.
People's, kind of recoil a little bit. It should be often an area of last resort. You don't want to typically leverage your equity in your home, because you always need a place to sleep. So you don't want to put yourself in jeopardy if you don't have to there. Updated news on credit cards, and I'm starting to get a little nervous about this Visa and MasterCard settlement here. So there's been a long battle regarding interchange, which is basically if you or I go to swipe our card at the local gas station, there is a fee that is assessed to that gas station for me using a Visa or MasterCard. It can be anywhere from 2.5% to 3%, depending on what card you're talking about. Now, Visa or MasterCard, they don't net that whole 2.5% or 3%. They take a very small percentage of that called interchange. There has been a lot of push by merchants for years to lower that fee, and now it appears that there is a settlement that still needs court approval that could have negative implications to what different merchants accept in terms of Visa credit cards. Now, typically, if somewhere like Costco says, we accept Visa credit cards, that means they accept all Visa credit cards. But there's the possibility that if I have a Chase Sapphire Rewards card, would pay a higher cost for an item, Mark, than you would with a lower version of that card, for example. Basically, they would break out tiers of charge based on rewards card versus a more basic version of a credit card. And that would just drive me insane to have to worry about, do I have the right type of card that works
that's not
here?
Gonna fly.
But the downside to the merchant doing that is I say, all right, Costco's not going to accept my, Chase Rewards card, then I'm less likely to shop there because they're going to nickel and dime me every single time. So there would be counter forces in place if this were to be the ripple effects of this settlement in place. So there's still a lot to be sorted out here, but that plus potential for rewards to be clawed back a little bit, because this settlement does require a 0.1% reduction in interchange fees paid over 5 years. So that would mean that, some of these rewards programs, maybe they'd have to peel back some of their offerings a little bit depending on what the card issuer looks like. So I just hope it doesn't get to that complexity of, certain cards you can't use at certain places, or you're charged more for using certain cards. It's much easier to just be, you accept Visa or you accept MasterCard or you don't, rather than breaking out each different tier of card and charging differently for those. So
yeah, I feel like it's a pretty good racket right now for some of us. I'd hate to have that disrupted.
Yeah, I'll never forget when I was
almost too good to be true. Though,
out
in
on a
some
date,
ways.
and I was at a place that they didn't expect American Express. That really left me in a bad spot. That's all the time that we have for this edition of the Financial Exchange, but we'll be right back at it tomorrow at 10 a.m. A happy Veterans Day to all our listeners out there. Thank you so much for your service and for joining us. We appreciate it.